Welcome to the M&S video, The New State Pension. In this video we will look at when you'll receive the new state pension, how much you'll get and how you build your entitlement, how to check your state pension value and when the time comes how to claim it, what happens if you delay claiming it, and what tax you pay when you reach state pension age. Your state pension age is linked to when you were born, and the government is gradually increasing this to 68. Take a moment to find when your date of birth falls within these timelines. You can find out the exact date you're due to receive your state pension by visiting the gov.uk website in the next steps below. The government reviews the state pension age on a regular basis, and there are proposals to bring forward these timelines. The amount of state pension you'll receive depends on your national insurance record. Your national insurance record stores information about the qualifying years you've built up during your working life. You'll earn a qualifying year if you're working and paying national insurance contributions, you're getting national insurance credits because you're receiving certain state benefits, such as child benefit, or you're paying voluntary national insurance contributions. You can find out more information about qualifying years, including which benefits qualify for a national insurance credit, by following the link in the next steps below. For every full qualifying year on your national insurance record, you'll receive 1/35th of the state pension. In order to get any state pension, you'll usually need at least 10 qualifying years. They don't have to be 10 qualifying years in a row. If you have 10 qualifying years, you'll receive 10/35ths of the maximum state pension. If you have between 10 and 35 qualifying years, you'll receive a proportion of the state pension depending on the number of qualifying years you've built up. For example, with 20 qualifying years, you will earn 20/35ths, which is over half. If you have 35 qualifying years, you'll receive the whole amount of state pension. A reduction to your state pension may apply if you were a member of your employer's contracted out pension scheme before April 2016. This reduction applies because members often paid reduced national insurance contributions in return for a lower state pension. It's not easy to remember if you were ever contracted out, so it's important that you get a state pension statement to check your record. You can check your state pension entitlement and national insurance record by getting a pension statement. It will show you your full national insurance record, including whether or not you contracted out, how much state pension you could get, the date you can claim the state pension, and if possible, how you can increase your state pension. The service can be accessed online by visiting the gov.uk website in the next steps below. If you haven't registered to use the government's online service before, you'll need to do so. Once registered, you'll be able to check your state pension on a regular basis. Alternatively, you could request a state pension statement by calling the Future Pension Centre helpline on 0800 731 0175. You don't get the state pension automatically, you have to claim it. 4 months before your state pension age, you should receive a letter inviting you to claim the state pension. There are 3 ways to claim. Online, the service is available 24 hours a day, 7 days a week, by calling the State Pension Claim Line, or by completing a state pension claim form. It may take a while to process your claim, so it's a good idea to claim in advance. You can find more information on the gov.uk website by following the link in the next steps below. If you claim your state pension more than 1 year after your state pension age, your state pension is treated as being deferred. Deferred state pensions are increased by 1% for every 9 weeks that it's delayed, which is roughly the equivalent of 5.8% a year. It's important to note that you won't receive any back payment of state pension if it has been deferred. More information can be found on the gov.uk website by following the links in the next steps below. You can continue to work after you've claimed the state pension, and you won't pay any national insurance once you've reached state pension age. However, your state pension and any earnings will still be subject to income tax. Income tax is not deducted from your state pension. Instead, your tax code will normally be reduced by the amount of state pension you receive. This is the end of the new state pension video. Please click the next steps below the video to learn more, and use the knowledge checker to test your learning. Please be aware that this video is provided for illustrative purposes. It is not intended to be used for financial planning and does not constitute financial advice. Whilst every effort is made to ensure the accuracy of information contained in the video, it cannot be guaranteed.